All right, so it's April 30th, the end of the month, and April has just been a crazy month, as we all know. We've talked a lot about the market volatility, we've talked about tariffs, we've talked about earnings season coming up. So, what I want to do for this week is I want to summarize a lot of what we talked about, and then I have a couple of charts that I want to show everyone that hopefully will give some good insight on how markets behave over different periods of time. So let's start out. We always typically start out with the tariffs, right? Because these are making the headline news. And not much has happened. The only thing that we've really heard is that President Trump has offered that he's likely going to give some reprieve to Chinese tariffs. And of course, the market has responded positively to this news. He has not specified exactly what that means. He said he's going to be very nice, in quotes, in his words, toward China. Again, we don't know what exactly that means, but he does say that he's going to bring the tariffs, the tariff levels down on China. And I think this is a good thing across the board. I think what he wanted to implement was very high and definitely on the extreme side. And I think it just opened the door to conversations with President Xi, which is exactly what he really wanted to do ultimately. So we'll talk more about that once we get some word from him, but that's sort of to wrap up on the tariff side. Let's talk about earnings season and GDP a little bit now. So we're at about a third of the S&P 500 companies reporting, and out of those third of the companies, 74% have beat analyst expectations for earnings growth or earnings per share. And I would say this is pretty average, but it's definitely still a good sign knowing that we're on the right track. 3/4 of all companies that have reported so far are beating analyst expectations, which is always great news. Again, we still have about 2/3 left of the S&P 500 companies to report, but we're definitely off to what I think is a really good start because we know that tariffs have implications to companies' profitability and ultimately their earnings. So we'll see more what happens once we receive the final earnings reports for most of these companies, but we're definitely off to a really good start there. On the flip side, GDP is actually slowed down by 0.3%. So it's come down just a little bit. So, as a reminder, GDP is gross domestic product, and this is the culmination of all the goods and services produced in the United States. And it's given a nice big number at the end of the year, and it's usually tracked by percentages of how much the economy is growing or contracting. So, being that it's down 0.3%, it means that the economy is contracting or slowing down. To me, this is not a surprise at all. We've talked a lot that the economy is expected to slow down this year. Again, it's been on such a tremendous pace over these last few years, and inflation has been so persistent and so sticky, and the Fed is doing what they can to try to get the inflation rate down, and it's definitely come down a lot from where we were from 2022, but it really has persisted, and we're now really feeling the effects of that persisting inflation, seeing that the economy is slowing down. Again, is this something to be worried about or be panicked over? Not necessarily. It's just these are the data numbers coming in saying, hey, the US economy is slowing down, and it's just something to be mindful of. So I want to wrap up today's video with talking a little bit about how the market's done over April. I'm going to throw up a chart on the screen showing the 1-month S&P 500 performance of April. And you're going to see that it starts off real high, goes down real low, bounces back, goes down, and sort of then tapers off about flat toward the end of the month. And the S&P in April is down just under 2%. It's about 1.9% for the month. And when we look at what happened with the market over the month of April, we know that the market went absolutely crazy. I mean, there was a day where the markets had bottomed out at like down 10, down 11%, which is toward the beginning of the month. And they've really recovered a lot of losses since then. And I remember the beginning of April, it was a particularly challenging time for us at Vision Retirement because we were wrapping up tax season and we had folks calling in saying, hey, we're concerned about what's going on in the stock market. Should we be making any decisions? Should we be implementing any changes regarding our investment strategy? And if you remember from a few videos ago, we talked a lot about, well, is there actual data supporting the volatility? And we really weren't seeing any data supporting the volatility outside of just the media headlines saying, tariffs, 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 and the markets responded very negatively to that. But there was nothing to tell us as advisors to say, we really need to consider some changes in our investment strategies for our clients. And the proof is in the pudding there, because when we look at it and the market being down 10%, to start off the month of April, and now it's down only not even 2%, right? Just under 2% at this point. It reassures us that we made the right call in saying to stick this out and not follow a lot of what the headlines were saying. If we look at what the S&P 500 has done over the last 12 months, we'll see that the markets are up about 9% over a 12-month period. So in spite of the markets coming down recently, which nobody ever wants to see that, right? It's never a pleasant experience seeing your statement or logging in or hearing on the news that the markets are down. But over the last 12 months, the market is still up 9%, which is a great rate of return, right? That's what the S&P 500 historically averages over the last 20, 30 years or so, is right on 9%. So we're at the S&P 500 average over the last 12 months, which to me, I think is really reassuring news. And it just reiterates the fact that a lot of what we've been hearing about tariffs and the volatility is just not supported by any data sources that are actually out there. Now, we do know, we talked about GDP coming down a little bit, and that's a hard data fact that we want to take a look at and say, okay, with GDP slowing down and the economy slowing down, do we need to make reallocations? And the answer could be maybe, for sure. But we want to use data, right? We want to say, okay, what do company earnings look like, right? We said earlier in today's video that company earnings right now look pretty healthy in the S&P 500. GDP is coming down a little bit. So we need to take all these data points into consideration and say, okay, what's likely to happen in the stock market provided from data over the next 3 to 6 months, and how can we make educated decisions and not emotional decisions around investment strategies. I think these two charts just help give some perspective, knowing that April was kind of a wash, right? But it definitely is a lot better compared to the end of the month. I mean, me personally, I'd much rather be down 2% than 10%, right? I mean, of course, I'd rather it be up at the end of the day, but I'd rather, if I'm going to experience a loss that's unavoidable, I want to minimize that loss as much as I can. And staying invested was actually the best way to do it, right? Especially knowing the fact that over the last 12 months, the market has actually done quite well. And, we'll see these cycles continue, right? This is not the first time the market has experienced volatility. This is not the last time the market's going to experience volatility. But I wanted to introduce these charts to everyone because these are what we look at as financial planners to say, okay, how can we make decisions and not just look at one snapshot in time, but look at multiple snapshots in time and say, what are the trends? What are the data points coming in looking like? And how can we make educated and informed decisions around investment strategies? So with that in mind, thank you for tuning into today's video. We'll talk more about earnings season because we're expecting more earnings to be released over the next few weeks. We have the labor reports coming out. So a lot of really good data points that we can discuss and say, okay, what does this actually mean? So I'm definitely excited to talk more about that with each and every one of you. And again, if you have any questions or want to chat further about this, you're always welcome to give our office a shout and we would love to hear from you. So again, thank you so much for tuning in today and I'll see everyone next week.